Personal finance practice problem using Excel. Overdraft protection cost calculations. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. We're considering overdraft protection here. And when we're thinking about overdraft protection, we're thinking about the checking account, which we're hoping will remain in the positive, will remain in the green instead of the red going negative, being overdrawn. But in the event that it gets overdrawn, for example, if we were to have transactions going from our checking account over and above possibly automatic transactions, resulting in it going negative, we would like to have some security related to that. One would be, if possible, we would like to have our financial institution possibly pick up the overdraft, honor then the transactions, so that we're not going to default on the payments that are going to be going forward and our commitments to the payments that have been made. And two, we'd also like to limit or reduce the amount of penalties that could be involved for that situation, because obviously the bank is in business to have an account that is not overdrawn, because they want to have, the whole point of them giving you the service that you can use the checking account is that you have money with the bank so that they can then hold on to a portion of it and do their loans things, loaning out money to others. And if we have a negative account, then of course they're going to charging penalties in some way. So we have our overdraft protection. So then what's going to be the cost in essence of the overdraft protection? And it might be formatted in a couple different ways, but that's what we'll consider here. So we have the charge for each 100 or portion of 100 borrowed when an overdraft happens. So we're going to say the overdraft is happening. We're going to say that the bank is going to basically charge us for every portion of $100, meaning we're going to assume here that even if it was like $5, they're going to charge us this rate on $100. And if it was $220, they're going to charge us in essence on $300. So any portion of the 100. So we have an overdraft here that we will imagine of 530. So we're imagining then that transactions had taken place in our checking account, drawing the balance down below zero by 530. And then the bank is going to basically hopefully honor the 530 payments that we have committed to make to the third parties, so that we don't get in trouble with not paying something, which becomes especially important if we're talking about things like credit cards, or if we're talking about paying mortgage payments or something like that, because if we don't honor those and we pay late, it could have an impact on the credit. And then we would like to say, okay, and then we'll pay the bank for whatever costs that are going to be there for them to do that for us. So if we had the overdraft, we're going to say, let's say that the number of $100 increments that we're going to have here, we're going to say it's a little bit tricky. It's going to be the not 500, but 500 up to 600, right? Because we have the increment of 30 up to the 600. So we could just type. Now you could try to think about using a formula here, but just note that the formula is a little bit complex, because remember the two formulas that you would think about for rounding. There's a round formula. We got equals round here. And in this case, we would want to use the round up, but that formula usually is going to be rounding up to basically the dollar. And when you're talking about, you put in this amount and then the number of digits. There's another one where we could round to like 100 or 1000, which is the M round formula. So we have this one, which means we can pick up this number and then round to the multiple, which would be 100 here. But if I use that, then it's going to be rounding up and down versus based on, the 551 would round up and so on. If this was 551, we would round up. So it's a little bit tricky, the formula, to round anything over the 500. We could use if-then formulas, but I'm just going to type it in here just to note on some of those formulas. And then we're going to pick up the rate. We're going to pick up the rate, which we're going to say is the 15%. Let's percentify that by going to the number group, percentify, font group, and then underline. And that would be the cost. Let's say the cost is going to be equal to the 600 times the 15%. So that would be, now if you don't have overdraft protection, then you might have then the question, of course, would be, well, what would happen if I go negative? Are you going to honor the payments that would be going out, and if so, are there going to be penalties on top of that, which they might charge by basically attempt of a payment to be made over and above the balance. So you might see a typical other kind of payment structure without the overdraft, which would assume something like this: assume no overdraft protection and overdraft charges, number of overdrafts. Let's say we had 7 overdraft charges and they were 45, they're costing us $45 each, so they're charging us per amount. Then it would depend on the number of charges that we have. But if we had 7, it would look something like this: number of overdraft charges, and would pick up the 7 versus, and then the amount or the cost per charge we're going to say is the 45, and that will give us the penalty for the overdraft charges. So I'll just call penalties for the overdraft, which will be equal to the 7 times the 45. And there we have the 315 font group and underline. And then here is the difference, which is going to be equal to the 315 minus the 90. So in the event that happens, you would expect then the overdraft protection to be better off. So generally, even if there's a small charge for overdraft or something, you want to know what, compare that from institution to institution. Usually it's going to be good to have the overdraft protection. However, of course, because, oftentimes the cost will be lower even if you have and incur an overdraft, your account goes into negative, and you want to make sure that the bank, will give you some protection, hopefully, to cover the obligations that you said you're going to make when you make payments, especially to things like loans, credit cards, things like, and that helps you with your reputation, which is reflected oftentimes in the credit score, so that you can make sure that your credit score will have this buffer to it in the event that you mistakenly overdraft and you have these instances where your payments are late.